There was a lot of concern leading into Jerome Powell's speech today. After all of the bubbles in all of the asset classes, many feared that the Fed would finally make good on the warning that the Fed would begin to taper. But instead, there was a nothing burger. Powell was far more dovish than anyone had expected. He barely mentioned the upcoming taper, and as a result, we were up nearly 1% on the S&P 500, which rose above 4,500 for the first time. And that in itself led to the 52nd all-time high for 2021. What this means is at this pace, 2021 will be the year with a record number of records. So, let's take a look. Before we look at the charts, if you haven't noticed, the S&P 500 just doubled off the pandemic low. That was the fastest pace of a double since 1932. And how can we make sense of this with much of the economy still shut down, unemployment rampant, and rising prices? While many pundits and analysts claim that they can't find an explanation for the unprecedented run-up in stocks, one only needs to look no further than the Fed's $8.3 trillion balance sheet. But, as true as the sunrise tomorrow, have confidence that the market will eventually correct itself. We're not there yet, but be prepared. So now, let's go take a look at the charts. And we're now taking a look at the 6-month daily chart on the spiders, the SPY, and the close on Friday was 450.25. Now this chart obviously should look very similar to the chart we just looked at, simply because of the Fed balance sheet. And you can take a look at this channel here. Moving on up, this is the 50 EMA, which is a pretty good bottom line for that channel, and then the top line running through like that. Now, as long as we continue to cycle through, all is well. We want to watch to see if we do pop out above, and then we could be heading into a melt up, or if we come on down. That might be one of the first signs of a breakdown in the market. So keep your eyes open. There into volume, not going to tell you too much, it looks good. And then here into the MAC, pretty much the same thing. This is the zero line. As long as we're above the zero line, things are fine. And you can see that the bottoms of these moves in the fast line right here, moving through like that, it's a gently upward sloping trend line. So things are continuing to strengthen. You see there in the histogram, the cycle above and below the zero line is a nice balanced movement in the stock cycle. Down here into the price rate of change, pretty much the same thing. We're above that zero line. As long as we can stay above that zero line for the most part, again, it's strong. Down here into the relative strength index, pretty much the same thing. And then into the stochastics, again, a repeat. And then the Williams, nice and strong all the way up through here. Look at those bottoms. Their trend line is moving on up. So the market is actually continuing to strengthen. Back here to the price chart. And one last look. And the only thing I ask is to be patient and prudent. And for today, that's ChewDog Charts. Thank you.